So hello traders and welcome to today's weekly market snippets. Today being the July of 19th, 2025. And what you're going to look at basically is the global markets overview, and the key themes that will be driving this conversation is the global markets. We'll be looking at we have had experienced a mixed performance with tariff uncertainty driving a volatility this week that ended yesterday. And some of the key events, it's about Trump's tariff deadlines extension, which was extended to August 1st. And also we had some talks about the Fed chair speculation, which intensified because there is the tensions about the firing of the Fed chair, Jerome Powell. And also we'll be looking at the Q2 earnings seasons for the US companies, which are already kicked off. We have seen the banking industry reporting some strong earnings. And also we'll be looking at next week what you're anticipating the consumer companies and also some of the tech companies like Google. So the key thing is for the in terms of investors' forecast is the trade negotiations, the Federal Reserve policy, and also the corporate earnings. Right. So let's jump into it. So beginning by the global markets performance, a snapshot, we were able to witness the Dow Jones Industrial Average close the week at negative 0.1% gains. We were able to see S&P 500 close the week at positive 0.6%, Nasdaq as positive 1.5%. The dollar index was able to gain some strength, also being the second consecutive week. We are seeing some signs of bullishness, and it closed the week at 0.65%. Gold, we were able to see a negative trajectory. Price were able to push down for the week at negative 0.17%. So in terms of year to date, the Dow Jones, the S&P 500, Nasdaq, and also gold, we are seeing positive figures, 4.20%, 7.1%, 8.2%, and 27.66% respectively. Whereas for the DXY, that is the dollar index, we are still in the negative trajectory at negative 2.7%, negative 9.27%. So let's talk about the tariff development. So we saw a new deadline, that is August 1st deadline, whereby Trump extended the tariff deadline from 9th July, which was the deadline that was there before, to August 1st, and giving a trade patterns time to negotiate. And some of the key threats that we have been able to witness is the 30% on EU and Mexico imports, which was announced on July 12th. We were able to see also that 5% tariff on Canada, 50% on Brazil for non-trade reasons, and also 50% copper tariff, which were confirmed effective August 1st. So this was just a mention, but they will now be implemented starting August 1st. And the markets are very receptive with these. We were able to see the prices of copper skyrocket and actually going to the all-time highs. All right. So in terms of trade deals, the framework agreement with the UK, China, Vietnam, it's very important because you are seeing some of these countries have already begun the trade negotiations. We are actually, including even the EU, whereby we are waiting to see whether they'll be able to strike a deal or not. But also we have been seeing other countries which have been lagging behind. They have not really shown any interest in terms of negotiations. And since we still have some time before August 1st, it's good to monitor and see whether they are going to come out and maybe probably align themselves accordingly in terms of negotiations. So how did the market react in terms of the tariffs? So there was some muted response. The global market showed a resilience compared to April sell-off. So we didn't see much of these. I think now the market has have solved the tariff reactions, because if you compare to the April sell-off, what was referred to as the liberation day, we saw the markets really tanked, or we saw the market really a very big sell-off. But right now we are not seeing such kind, because like I said, I think now the market has come to a point whereby it has been able to absorb the tariffs. tariff sentiment. So in terms of investor sentiments, the markets are banking on Trump's tackle, which you call the Trump always the chickens out pattern, expecting negotiations or delays. So again, this is tackle is just what Donald Trump has been able to show investors, because he had always that the chickening out, whereby we saw first of all the extension of the deadline from 9th July to 1st August. Of course, now maybe probably expecting some negotiations, the countries to come out and negotiate. Okay, and this has caused some delays in terms of implementation. But you never know. Maybe if TACO continues, maybe come August 1st, we might maybe probably see another extension. But this is not a guarantee, but it's something that has really shifted the investors' sentiments. So in terms of risk, is we are looking at a potential for sharper declines. If no deals by August 1st, we might see some potential declines, especially in different jurisdictions. All right. So we have also witnessed the speculations around the Fed chair, Mr. Jerome Powell. Mr. Jerome Powell. Who is the chair for the Federal Reserve. And we have seen Trump met Fed Chair Jerome Powell criticized for no cutting rates. So we saw this criticization really taking place last week, and it really made the markets to react on that. We saw a lot of bullishness. We saw the dollar weaken on Thursday, and we were able to see a lot of bullishness, especially for the currency pairs like GBP USD, Euro USD. Also, gold really appreciated in price on Thursday when this meeting, when the Donald Trump was giving a speech in terms of what he is thinking about Jerome Powell. Again, also on Thursday, when he was issuing that same speech, we saw some softer stance. He gave some hint in terms of a softer stance for the Chinese tariffs. And yeah, the dollar really weakened. But now the market was able to reprice itself amid that turmoil or that volatility. So the speculation on replacement, we are looking at the best potential candidate for Fed chair successor being the Treasury Secretary Scott Bessent, because we have been able to hear rumors from different sources, which I might call maybe probably reliable sources, that Treasury Secretary Scott Bessent might be able or is a potential candidate for Fed chair successor. And we are looking at this being maybe probably come May 2026 because of that's when Jerome Powell's term end. All right. Surprisingly, Donald Trump criticizing Jerome Powell, it's surprise. It's a surprise because he is the same person who appointed Jerome Powell, right? He is the same person who appointed Jerome Powell as the chair for Fed. But right now we are seeing such kind of criticism, and I think the reason why anytime he goes to a president asked whether maybe probably gonna fire Jerome Powell, he says that he has no intention to fire Jerome Powell. But again, last week we were able to see him showing a letter that is already penned in terms of firing Jerome Powell, and maybe he might release the letter or not, but let's see what transpires. So in terms of market impact, like I said on Thursday, we were able to see Treasury yields being very volatile. The 10-year, which gained at 4.423%, and it's up 7.7 basis points. So in terms of economic indicators, the key economic indicators we had this week that ended yesterday on Friday was the CPI data and both the inflation data, the US inflation data, both the CPI and the PPI. We were able to see a slight increment in the yearly CPI to 2.7%. The core CPI stood at 0.6%. That is for the month of June. The PPI data came softer than anticipated, But looking at these, we still see stubbornness in terms of CPI, and these shapes maybe probably provides key sentiments, maybe probably for the Fed in terms of cutting rates. I remember this week also we saw some pressure from Jerome Powell. Was it this week or last week, but one, whereby he said that he anticipates to see the June inflation. Actually, it was last week, but one, whereby he had hinted he is anticipating to see the he's anticipating to see the June CPI increase, again citing the tariff pressure, the pressure from the ongoing US tariffs. So in terms of consumer spending, the retail sales for June stood at 0.6%. JP Morgan revised their 2025 US GDP to 1.4. Again, this is due to tariff uncertainty. So in terms of sector highlights, yeah, we are seeing an Nvidia up 0.5% after it hits the $4.02 trillion dollars valuation mark. For the defense sector, also we are looking at the aero environment, which gained 11%. It's 11% up after drone production surge order. For commodities, we are looking at Brent crude oil, copper prices as well. That's what has been really on the spotlight. So in terms of retail, Apple shares are stable despite the tariff exposures. We haven't seen much volatility in terms of Apple. So, but again, remember we are into the Q2 earnings, whereby the US companies have started releasing their earnings. We have seen the financial sector start the pace, whereby we have witnessed JP Morgan Chase, Wells Fargo, Goldman Sachs, Bank of America, which have been able to release their results, including also is it not Wells Fargo, including also the Citigroup, which has also been able to release their earnings. So in terms of JP Morgan Chase, the Q2 profit stood at $14.9 billion. The reported EPS was 5.2. 4%, which beat the estimate of $4.48. Revenue standing at 44.91 billion. Wells Fargo, we have seen the Q2 profits at $5.3 billion. The reported EPS was 1.6, which beats the estimated EPS of $1.49. So we have seen a strong trading revenue as well for Wells Fargo. Goldman Sachs Q2 EPS stood at 10.91, which beat the estimated of $9.65 EPS. We have also been able to see the investment bank fees up 49% to $2.48 billion. All right. So for the Bank of America, Q2 profits stood at $6.9 billion. The reported EPS at $0.89, which again beats the estimation of $0.86. So again, here we have also been able to see strong fee earnings. So what is the key takeaway with this banking sector? The key takeaway here is we have seen a bank resilient despite the tariffs, despite the risk in the tariffs, which boosted by trading and a deal, which have been boosted by trading and deal making. Also, what maybe probably on the spotlight, like I said, we were able to witness also the results for Citigroup, whereby we were able to see Citigroup report an EPS of $1.96 vis-a-vis the estimation of $1.66 dollars. So the revenue forecast, it was able to the revenue that was reported for Citigroup was $21.67 billion vis-a-vis the forecasted revenue of $21 billion. So again, reporting showing a lot of resilience amid the tariff risk. All right. So when we look at the consumer and health, we're able to see Pepsi company, which reported their Q2 earnings report. The EPS stood at the reported EPS stood at 2.12 billion, $2.12 vis-a-vis the estimation of $2.03. But the stock pressured by health scrutiny and GLP drug impact. When you look at the Johnson and Johnson Q2 EPS stood at 2.77, the one that was reported, the reported EPS, vis-a-vis the estimated EPS of $2.68. So there are some litigation concerns which lingered, but we had very strong farmer sales. So the key takeaways here is for the consumer staples, we have seen them face the headwinds from health trends, healthcare stable, but we have also seen the legal risk, which have been so much into persistence. When you look at some of the maybe probably the estimated earnings, for instance, if you look at Johnson and Johnson, the actual revenue stood at $23.74 billion vis-a-vis the forecasted revenue of $22.85 billion dollars. Okay, so maybe to mention, we also had Netflix, which released their earnings. We were able to see a reported EPS of $7.19 vis-a-vis the estimated EPS of $7.07. The reported revenue, the actual revenue stood at $1.08 billion vis-a-vis the revenue forecast of $11.06 billion dollars. So we are seeing some strong earnings for these for the companies that have been able to release their earnings so far. So in terms of global trade tensions, so what is important here is, like I said, we are looking at the US EU trade deal. We were anticipating maybe some great milestones these are particular the week that just ended yesterday, but what we just saw is the EU responding to this, and it warned of retaliatory tariffs on US digital services. So for the Brazil, we saw the Brazil president Lula, who vowed also for reciprocity, and he cites sovereignty being a very important aspect. So for China, Trump was able to come out again with a softer tone. That was on Thursday, like I mentioned, and he was able to reduce the tariffs to 30%. But tension still persists because it is a deal that has not really been sealed officially. For BRICS threat, we have seen them issuing a threat about additional 10% tariffs proposed for BRICS aligned countries. I mean, we have been able to see Donald Trump give additional 10%, give an additional 10% tariff for the proposed BRICS aligned countries. So the key news for this coming week from July 20th to July 26th, we will be following on trade and negotiations, whereby the progress update expected from EU, Canada, and Japan, so which is very critical in terms of whether there will be a deal or no deal. And again, the market, of course, we anticipate some reactions from this, so we're gonna anticipate some bit of volatility or some volatility kicking the market. In terms of the corporate earnings report, the Q2 results, we are looking at the tech giants like Google, Tesla, and also the consumers like Coca-Cola companies. Also, AT&T company will be releasing their earnings. So for the Federal Reserve, it's important to watch for signals on rate policy amid tariff-driven inflation fears, because so far so good as the market stands, it has priced itself for at least a two rate cut of 0.25% or 25 basis point cut each. So that's around 50 basis point cut for the year 2025. So it's important also to look at the China data, that is the gross domestic product and the and other economic indicator releases on July 22nd. So Just mention about the upcoming earnings. So we are looking at Google, that is Alphabet, which is expected. Their earnings report is expected on July 21st, 23rd, and the focus is on AI investments, ad revenue growth, among other parameters to look at. So Tesla, it's expected to release its earnings on July 23rd. Investors eyeing delivery numbers, the numbers that gonna be there. You remember, we really had a lot of Tesla really lost quite a lot of money, about 151 billion, the time that we had Donald Trump and Elon Musk contentions, right? Then also Cybertruck production updates will be very significant for Tesla. So for the Coca-Cola company, it's expected, their results are expected on July 22nd. The key things to look at is the scrutiny on day rollback impact and also its volume growth. The AT&T company expected the results will be on July 23rd. Focus will be on the 5G expansion and also debt reduction progress. So the key takeaways, tech and telecommunication earnings are very critical for the market sentiment. Consumer staples, we have seen them face a tariff, so it's important to look at how they may be probably the earnings gonna look like amid the tariff risk, and also some of them have been facing the regulatory pressures. All right. So watch to watch this week. We will be having some few key central bank individuals, the governors of BOE, Bank of England, and the Reserve Bank of Australia will be giving out their speeches, or will be speaking out. Also, we'll be looking at the French and Germany flash manufacturing and service PMIs, which will be affecting the euro pair. Or the euro. We have also the flash manufacturing and service PMIs for UK, which will be affecting the pound. We have the ECB main refinancing rate. And also the ECB pressure, which will really impact the euro. And also we have the unemployment claims and the flash manufacturing and service PMIs for USD. Again, we anticipate some volatility there. And on Friday, we'll be having the retail sales for UK, which will be affecting the pound. So for investors, a recommendation, it's important to monitor the tariff talks. So August 1st deadline, which is critical for EU, Mexico, and Canada, and also other nations. The focus on earnings, again, we are looking at a strong Q2 results, which could offset the trade concerns. It's important for investors also to look at ways in terms of hedging volatility. So it's important to consider the safe haven assets like treasuries, gold, currencies like CHF, also there are safe havens that maybe investors are gonna consider. So it's also important to track the Fed signal, whereby Powell's comment on inflation and rates will be very crucial in terms of signaling whether maybe probably gonna still have the two rate cuts as projected for these particular year 2025. All right. So the closing thoughts here is to be cautious, the cautious optimism as markets await trade deal clarity. In terms of risk, tariff escalation, Fed policy shift, geographical tensions, it's important to keep an eye on that. In terms of opportunities, let's look at the earnings results and potential trade resolution, which could lift the sentiments. And also, it's important to stay up to date in terms of what is happening on the markets. And the reason why you're gonna like, share, subscribe to this channel, because every week, I always share insights in terms of what has transpired of the week and maybe probably what we are looking at next week. Okay. So with that, I can't end the session. I can't end the webinar without looking at the DXY and maybe probably the gold chart. So let's jump into the charts. This is the DXY chart, and we had analyzed this last week, whereby we were looking at the price coming to fill the gaps here. And the moment we see that, we look at the price coming to this particular level that we had here, the OB that we had here, and then we see some rejection, and you can see the market did exactly that. Maybe I can preview it in the 4-hour time frame. So you can see these gaps here. That's what we want, splitting the market to fill this gap. Then once it does that, we see the price coming back, pushing up all the way to this 4-hour order block, whereby we have seen the price do exactly that. So we are looking at some bullish sentiment. If you look at it from the daily time frame, what we are seeing here is a very strong downtrend. We are seeing series of lower lows and lower highs. And what is important to monitor, remember we look at the daily, weekly, and monthly for us to be able to determine the trend. And then now we go to the lower time frames like the 4-hour time frame to mark our zones, and then now the lower time frames to look for entries. So looking at it from the daily time frame, we are still looking at a downtrend, but where the price is in a very critical level, because if the price rejects from this level, as we are trying to see some bit of rejection, then it means that we might see the price push down all the way back to where it had originated from. These are lows here, the month, the daily, the previous lows, or the what we call the sell side liquidities at that particular point. But in case we are going to witness a break above this level, then what it means is that we might be able to see more bullish prices, of course, targeting these major highs or the buy side liquidities at this particular level, which is also the same level that we have this particular daily daily OB, which maybe probably let's go to the weekly time frame. When you look at it from not the weekly time frame, but from the daily time frame, from the 4-hour time frame, then we are able to minimize these to that. That's the OB that we have, and these are the liquidities that we are talking about, the buy side liquidity. So what are we monitoring? So we are monitoring whether the market will be able to maybe probably break above this level. The moment we see the price break above this zone, then we'll be eyeing the liquidities here at 100.50 level, and then we'll be seeing the price coming to around 101.50 levels. And remember, I've been saying as long as we are below the $100 mark for the DXY, we are very bearish. But the moment the dollar index is able to reclaim the 100 level and close precisely decisively above that level, then it might linger in some bullish sentiment. But looking at the 4-hour time frame, we are seeing that bullishness already. We can be able to witness the change of character that happened at this particular point, because actually here, because this is the previous low, the previous high, and this is where we have the low. So the price has been creating, or the price pushed up, created a shift in market structure at this particular level. This is where we had the shift in market structure, and now welcoming in the bullish sentiment from the 4-hour time frame. So we are seeing a very strong bullish trend here in the 4-hour time frame. So we'll be monitoring whether the price will be able to maybe break above this level for us to now have a more bullish sentiment confirmed even from the daily time frame. Or in case we're gonna see the price unable to break below this level, then we're gonna still hold on our bearish sentiment. This will also be driven by several factors, especially the trade deals, whereby we anticipate the DXY to be very receptive in terms of what's the deal that the US gonna close in terms of negotiations with the different nations, the EU, Canada, Brazil, Mexico, etc., etc. So when we look at the gold chart, we have been seeing quite a bit of volatility for gold. Let me just use a clean chart. For gold, remember what we have been looking at. Let me begin from maybe the weekly time frame. So remember, we had been looking at this kind of a pattern here. We see the price consolidating or trading within this particular pattern. So we were anticipating the price. We are anticipating either breakout on the upper direction guided by this particular pattern here. So higher chances that we're gonna see the price break above, and we continue with the bullishness to reclaim the all-time high, which is at that 500 levels. That's where we have the all-time high at that 500 levels there. So when we go to the daily time frame, we see the consolidation is really narrowing down. All right, we see that narrowing consolidation from the daily time frame, but from the 4-hour time frame, I think this is why we'll be able to get more of clarity here. So you can see what the price has really been doing. We see the price it has been trying trading on a sideways. This is just sideways movement, but again, remember this is quite some good number of pips again for gold because it's quite volatile. So we see the price creating this level here, the 4-hour level here. We see the price pushing up, then we see some kind of retracement. So these are the first levels that we might see, maybe probably regarding in terms of maybe buying opportunity. For this one, I will maybe go down to the 1-hour time frame so that we can still have some bit of clarity. So this is what happened on Thursday when we had a softer tone for the Chinese tariff by Donald Trump, and also the speculation on whether to fire Jerome Powell or not. So we saw the price push up. Then later we saw the price push down, close below this particular level, create a BOS there. That is on Friday, the price reclaiming that before we see that bullish sentiment on Friday. So what we see here is the price are respecting this particular level. All right, we see the price are respecting that particular zone. So ours is now that because this level has been tested, now ours is to monitor what the price is going to do at this particular level. So I anticipate to see some bullish sentiment probably for the price coming to this level. But before that, as you can see here, we have a structure. Here we have a very definite structure. We have the price now pushing up, creating a BOS here, pushing up. So we anticipate to see what the price will do at this particular point. Once I want to see maybe price push down so that we can get some buying objections from this particular level, targeting these levels here. Right, targeting these levels here. That's what maybe a scenario that I might want to look at. And maybe probably also the price can push down to this zone here because it's also a key buying zone. It's also a key buying zone as well here because as you can see here, we see a BOS from this move to this move here, we see a BOS. So meaning that also there is a potential of prices pushing down to this level, then we see a bullish sentiment all the way to that particular point. And the moment we see the price break above this level, that's above this level, the moment we see a break above the 33.77 levels, then we will be looking at more bullishness, maybe for the price to come to about 34.50 levels, this level here. Okay, so but in case the price now breaks below this level that we have marked here, in case we see a break below this level, then we might see the price come to this level of about 32.95. These levels here, 32.95, because at this particular level we have a key zone. We have a bullish order block, which is a high probability bullish order block. Okay. So for more insights on how to navigate around gold, the DXY, among other currency pairs, make sure to join our weekly live market analysis that we do on Monday to Thursday, 10 a.m. to 11 a.m., which is sponsored courtesy of Scope Markets Kenya. So thank you so much, and I wish you a wonderful week ahead. Trade cautiously, trade cautiously, approach the market with the discipline, and let's see what the week will have for us.